Yo, what's up, guys? It's your boy Looney, and today I want to talk about something every investor eventually faces, and that is the feeling when the market feels hopeless. You wake up, everything is red, your winners are turning into losses, you have crypto or volatile positions absolutely bleeding, your favorite stocks keep making new lows, and all that confidence you had last month is gone. But here's the truth. This is exactly the moment long-term investors are built. And it's the exact moment most people quit. So in this video, I'm going to break down why I keep investing even when it feels pointless and how I stay grounded when the market looks like it's falling apart. Before we get into it, quick shout out to the Discord. It is free to join and the premium is $8 a month and you get coaching, trade callouts, an option selling course, giveaways, and more. All the links are in the description. Let's jump in. So one of the biggest lessons I have learned is that the market always feels hopeless at the bottom, or the market feels the worst right before it turns. And I think about the most recent crash or correction. October, we saw a correction. April, we saw a crash, and even some kind of panic selling in between in real time. And it always feels like this time is different, this time it's over, or we're never recovering. But the truth is, all crashes have recovered. The 2020 crash, the 2018 crash, the 2008 crash, every crypto cycle even recovered eventually. So every panic kind of looks obvious in hindsight. And hopelessness is part of the cycle. And it's not a sign that the cycle is over. So when I invest, I don't invest based on vibes. I invest based on process because feelings lie, headlines lie, even fear can lie. So I follow a simple rule. If the long-term fundamentals of whatever I'm investing in doesn't change, then my plan doesn't change. So for example, something like Riot. Riot's one of my biggest positions and my thesis hasn't changed. I think this is a growing company and this is a long-term position. Now, if Riot drops or SoFi gets hit, maybe even crypto pulls back, we go into a bear market, and I still believe in the business or asset, these dips become opportunities. And these are not reasons to panic sell. And I'm not saying to go all in, right? You do need cash and you need that opportunity to do safer investments, diversify, and just overall having like that emergency type of cash allocation. But I am saying to stay consistent. I'm staying consistent with Riot. If Riot somehow drops below $9, I'm going to buy more. If we see massive volatility, the VIX jumps 20%, I'll buy more. If we see some flash crash, some Black Monday, or something insane, I'll buy more. And I'm not going to go all in. I'm going to stay consistent. I'm going to be strategic, but I'm not going to try and find the exact bottom and sort of time these things. I'm going to let time work for me. So that's why I also DCA, because DCA makes the hopeless moments kind of my best moments. It really removes the emotion, and I feel like it's sort of a cheat code when it comes to it. Because when the market feels hopeless, prices are lower, valuations are a little bit better, premiums for selling options is higher, and emotion is often driving decisions, not logic. So we're dollar cost averaging, you don't have to go through that. So for example, I am buying Robinhood or crypto. Let's go to crypto because I just went over Robinhood because I dollar cost average into that. You could do the same strategy with basically anything, but I'm going to do with Bitcoin because Bitcoin's a very volatile stock. It can go to zero. It can go to a million. You hear everyone saying where it's going to go next. And I'm buying Bitcoin every day. And I'm adding slowly and building that position over time and smoothing out my average costs. Now, I have taken profits, so it is a little skewed of my returns. I'm only up 2%. But I was up pretty significant and I took some profit. But dollar cost averaging is really good for your emotions because the hopeless markets often are discounted markets because people forget this. The money is made during the downturn and it doesn't just show up until the recovery. Now, I talk about dollar cost averaging. This is sort of a beginner strategy, but you can also do this with selling options. And this is a part that not many people talk about when it comes to, I guess, timing or when the market feels hopeless, because when the market dips, volatility rises. So for example, we can look at the VIX. Now, the VIX spiked a ton in April, almost up 50, or was at 50, and we're seeing that again. We're seeing that spike, not as dramatic, but it is rising, and the premiums are a little bit better. And also fear is rising. And those three things, fear, premium, and volatility, are perfect for option selling. So I'm selling puts on stocks I'm happy to own at these lower prices. I'm doing it on Webull. I'm doing it on HIMS, or the leveraged HIMS. I'm doing it on Zeta. I'm doing it even on Mara, trying to acquire those shares. These dips aren't meant to scare. There's supposed to be opportunity, or at least that's the way I feel. I feel like I'm getting an opportunity to dollar cost average with selling options and lowering my average cost and just building that position, because then because once I get those shares, I could sell covered calls and you could collect income, maybe even reinvest that premium back into shares. I've done that before with HIMS, where I sold a covered call, took a portion of the premium, and I ended up buying a share of HIMS, or 2 shares of HIMS. So hopeless markets means higher income for patient traders. And that's why I stay in the game. Because the truth is, markets only reward the people that are patient or don't quit. Because that's the hard reality nobody wants to talk about, is most people never get rich investing because they stop. It's because they often are there during the downturns as well, whereas others are buying high, they're panic selling low, and they're just repeating that. Where I'm trying to is do the opposite. I keep investing even when it feels pointless. I stay consistent even when I'm not seeing the results. And I trust my strategy more than I trust my emotions. And that's why I stay in the game when sort of most people are checking out. And I think that alone will help put me ahead of most investors. So yes, the market kind of feels hopeless right now. We've seen November have one of its worst moments. We're seeing fear everywhere. Crypto is shaky, stocks are weak. The Fed decision in December is super unclear. There's not a lot of data out there, and volatility is rising. There's fear among even a recession happening, but that's exactly why I keep going. Because hopelessness is temporary. Now, this volatility, this downturn can go on for months. And I'm just being patient because discipline is permanent. So if you found this video helpful, drop a like and comment what you're doing in this market. Are you buying? Are you holding? Are you selling? Or are you waiting? Until next time, peace.